What is up guys, Taiki here. Today I'd like to go over the ETH BTC chart and the narratives surrounding it. Is ETH about to take over the markets, leave Bitcoin in the dust, and is the L1 rotation narrative dead, right? Is Phantom, Luna, Solana, Avalanche, are those coins dead? I see a lot of narratives around that from like the ETH Maxi community, right? But I feel for the ETH Maxi community, right? Because they can't use their own chain. But even though I am bullish ETH, I'm the most bullish ETH. I still think in the short term, in this particular bull market, the L1 rotation, that narrative is here to stay. And I'll give my reasons. I'll give my reasonings surrounding that. I'll give my reasonings on why I think Luna and Phantom is next. So back to this chart. So this is obviously the ETH BTC chart, taking the price of Ethereum and dividing it by the price of Bitcoin. When the markets topped in, I guess mid-May, the ETH BTC chart ran up roughly 170% in a span of 6 weeks, which I guess like ran up way too fast. And for ETH to flip Bitcoin, it has to get to roughly 0.1625, which is roughly another 100% from here, right? So if the price of ETH outperforms Bitcoin by 100%, then ETH will flip Bitcoin, right? In terms of market cap. Obviously, Bitcoin is inflationary, right? They're like mining new Bitcoins every single day, and ETH is theoretically, it could be deflationary, it could be inflationary. So, these ratios aren't perfect, but generally, if ETH BTC goes up 100%, it's gonna be the flippening. And my thoughts on the flippening is that I think it can happen, right? And for this cycle, I think if ETH flips Bitcoin, it would be the most top signal thing ever, right? If it happens, then I'm most likely gonna go super risk off. Because yes, in the long term, I think it can happen. I used to be a Bitcoin maxi, and I used to be like, oh, it's never gonna happen, Bitcoin for life. But after being in this space for so long, I think that it's dumb, right? I think it's unreasonable to rule out the possibility that the flippening can happen. Just because ETH that can't scale right now, and L2, the ETH 2.0 narrative, that sharding, and like those, there are like some risks there. If the markets get to the point where Ethereum actually puts Bitcoin in market cap, I just feel like that's just like peak euphoria phase. And in hindsight, let's say we're in the year 2024, it would be like the most obvious top signal ever. But but in the meantime, let's try to make money in the markets, farming, rotation, whatever. And the reason why I mentioned earlier in the video that the L1 rotation I don't think is dead is because in this particular bull market, I feel like every crypto coin is valued relative to one another. So let's kind of go over CoinGecko and look at I guess like the top 50 in terms of L1s and like all these other coins as well. So obviously Bitcoin number one, and Ethereum is at $550 billion in market cap. And how I believe, right, these other L1s and why they've done so well is the simple narrative of why can't Solana be 10% the market cap of Ethereum? And then people look at each other and be like, wait, that kind of makes sense. Like, why can't it be, right? And then Solana just went up like 100x in a span of a few months. Avalanche, why can't Avalanche be like 5% the market cap of Ethereum? Okay, that makes sense, right? Why can't it, right? And then obviously, then the slippery slope is like, why can't it be 10% the market cap of Ethereum, right? Like, why if Cardano is 51 billion, then why can't Avalanche be over 51 billion, right? I mean, it's definitely possible, and I think it could get there, right? If the fundamentals do align. Similarly for Luna, why can't Luna be 10% the market cap of Ethereum? Why can't Luna be worth more than Cardano? Like, I don't really see a narrative around that. Obviously, this is definitely bull market things, right? Because in this particular market, right, when we're in this EVM clone scalability narrative, like all these like all these narratives that pop up every single month, it's it's like the best way to value these cryptocurrencies. And I feel like 12 to 24 months from now, like it's not going to make any sense, right? Because you do have to, like in a bear market, like this narrative is not going to stand, and you have to value these things based on fundamentals. But how do you value Avalanche, right? Like 28 billion. If Avalanche is 28 billion, then why is Luna 25 billion, right? Like, how do you value these things? It's super hard to value, like whether AVAX or Luna should have a higher market cap than Polkadot, a higher market cap than Algorand, because it's mostly driven on hype narratives and whatever the short-term narrative is. Crypto is very reflexive in the fact that on the way up, people become more bullish, and on the way down, people become more bearish. This is the reason why, on the recent run-up for, ETH, right? Everyone, like all the ETH maxis are super loud. They're like, yeah, like ETH is so much better. And then, in the recent run-up for Avalanche, it's like, oh yeah, ETH is, like Avalanche is the best. And then I'm sure in the coming weeks, you're going to see a bunch of Luna narratives, and I'm guilty of that, right? I mean, I'm like a bull tard when it comes to Luna, so obviously I'll be bull posting and making these videos. But crypto is driven on narratives, and in order for you to profit off of crypto, it's kind of important to kind of foresee what the narrative is going to be in the future. And obviously, Luna has some super strong narratives coming up with the launch of Astroport coming next week. So let's kind of compare Luna to that, to I guess the Avalanche coin, right? Because I think there are similar things going for it. So if you remember, I mean, I've been covering Avalanche for a while now, but the initial run up, right, was based off of like Avalanche Rush coming, $1 billion into the program, $500 million into the program, like whatever you want to call it. It's gonna be so bullish. Oh my God, Coinbase is coming soon. And then when Coinbase launched, Avalanche Rush kept getting delayed, right? It just like kept drugging us, and then the coin dumped. But over time, people are like, oh wait, Avalanche Rush is still here, right? Just because they delayed it doesn't mean that it's not actually coming. And then it's like, okay, full send it, right? And this was kind of essentially like the ABC, I guess the hype cycle for Avalanche. And though I am bullish Avalanche, bullish subnets, they're actually decentralized. It scales pretty well. Recently, they've been running into issues with scalability, right? The gas fees are kind of high, and they had a recent rug, right? I mean, I'm not going to speculate if it's a rug or not, but like one of the own forks allegedly rugged. So the narrative there might be, weakened, I guess. And I suspect Avalanche can definitely get to 10% of market cap of Ethereum, right? Like, it's so easy for people to think that way, right? And which is one of the reasons like these narratives exist in the first place. So I think Avalanche needs a few weeks to consolidate, but after that, like what's stopping it? And similarly, I think the recent underperformance of Luna is driven on a similar narrative. It's like, okay, Astroport is coming, Mars is coming, it's going to be the greatest thing ever. And then it got delayed, right? It's like, oh my God, like I thought it was coming in mid-November, now it's coming in early December. Actual token is launching in late December. It's like, oh my God, we got rugged. Delphi Digital rugged us. And now that next week is going to be Astroport, right? It's the month. It's December 1st. Oh, it's December. It's Astroport time. It's like full send it, right? And it's kind of dumb to think about it like this. But I feel like like you shouldn't try to outsmart the markets. You should just listen to the markets and behave accordingly. And that's kind of how I've been doing it. And I don't necessarily think that Luna is gonna just like gig ascend from here, right? Because I still argue that I don't think it's gonna do that. I argue it's gonna be more like a slow grind up, right? Something like this maybe. Just because I think the killer app for the Terra ecosystem is going to be the Mars protocol. I think it's going to lock up the highest TVL in the Terra ecosystem. It's going to flip Anchor, I believe. They're going to allow for M assets as collateral, right? So like stocks as collateral, right? Think about using Apple, the stock as collateral, borrow dollars against it, farm on Anchor to earn 20% and whatnot. And I don't know if it's going to be available for all retail, but Mars is also going to introduce under-collateralized lending, which, for a DeFi protocol is pretty important. I think the under-collateralized lending aspect is only going to be available for like whitelisted whales, right? So like institutions and whatnot, but still, right? I still think it's great innovation, and I think Mars is going to be the killer protocol. And Mars is only going to launch roughly in January, I believe, right? Maybe if you're optimistic, like late December, but let's just be conservative and say like mid-January. So until Mars and Astroport are both live and doing well, I don't really necessarily think that the price of Luna can like go parabolic. I mean, don't get me wrong, it could, right? Luna is one of my comfiest holds, and I continue to hold this token. Okay, so let's kind of go over to Astroport, right? This is the website, pretty slick, right? If we're living in the 2017 narrative, a slick website means that it's worthy of $1 billion valuation. So let's kind of go over like how I think about Astroport and why I think it's going to be a really hyped up and anticipated launch. So I think Astroport is going to command at least a $500 million market cap. Astroport is going to be the premier DEX on the Terra ecosystem. They are not going to have any competitors, which is pretty important. And it's going to be the Uniswap, Curve, and Balancer of Terra. And I think the combination of those three DEXs in one protocol with Delphi Digital or Delphi Labs, right? They designed the tokenomics of Axie Infinity. They designed they did like the economic design for Aave, right? The Delphi Digital, their team is super strong. They're designing the tokenomics and the economic model for Astroport and Mars. Delphi Labs is heavily involved in the Terra ecosystem, and that Lockdrop, the airdrop, all those things is very carefully designed, and I suspect that it's going to do really well. So let's kind of go over the airdrop that's going to happen, right? So I've been covering Terra in the Luna ecosystem for what is it, like 5 months now. And anyone that's participated in the Terra ecosystem is going to receive an airdrop. And I suspect that this airdrop is going to be worth roughly 4 figures. I mean, this is wishful thinking, right? You should always be cautious because I'm just like super biased towards the Terra ecosystem, but you know, at least like know that right beforehand. But essentially, the airdrop is the recipients for the airdrop are gonna be TeFi Chads, right? So you know, you and I, if we're in the Terra ecosystem since July, we are the TeFi Chads, and we're gonna receive an airdrop. And now I'll kind of quickly go over the Lockdrop, phase 1 and phase 2. So the airdrop, the ASTRO Airdrop, is going to be given to 2 types of people. So anyone that's had their Luna staked or had B Luna on Anchor prior to September 9th. Or actually, I think it has to be on September 9th. I think they took a snapshot on that particular date. And you're going to receive an airdrop. So if you've been following my videos, earning 40% in the Terra ecosystem with your Luna as collateral, right, you're going to receive this airdrop, right? Because I think most of us have had B Luna as collateral on Anchor. And we're going to receive 12.5 million tokens. I don't really know how it's going to be distributed, but you know, that's a lot of tokens. And then anyone that was providing liquidity on TerraSwap on September 9th is going to receive 12.5 million tokens. So I think anyone that were liquidity providers for TerraSwap is going to get a lot more tokens, right? Because the number of people doing this is much lower than the number of people staking it, right? I mean, almost everyone in the Terra ecosystem has been staking, right? Whether it be on Terra Station or on Anchor. So I feel like I'm not going to get that many tokens, but it is what it is, right? I'll take a free airdrop. And hopefully it's worth at least 4 figures, right? I think it's going to be a pretty good airdrop. We'll see. And then what's confusing is like the lock drop aspect, right? I've had a lot of questions. Even I don't fully understand this super well. I'm more in the camp of I understand like 80% of it, and when it actually launches, I'll look into it deeper, check the numbers, and kind of figure it out from here. But essentially, phase 1 is you can provide liquidity on TerraSwap and take those LB tokens and migrate it over into Astroport. You don't need to be a liquidity provider today. You just need to just take your LP tokens between December 6th and December 13th and migrate it over, right? So I think there's a lot of confusion. Like, you have to do it now. You don't have to. I mean, you could, right? I mean, you can do anything you want, right? But that's kind of how it works. So 34% of the tokens is going to go to Luna UST. Pretty good pool. I'm sure a lot of people go. 19% to Anchor UST, right? So I think I farmed roughly like $1,000 with the Anchor token. So I'm just gonna pair it up with $1,000 of UST and just put it into here, right? And just like farm some Astro. And the majority of my funds is gonna go to the B Luna pool, right? Yes, it's only 15% of the distribution. I think it's going to be oversubscribed, meaning that everyone is going to want to use B Luna, right? Because there's like little impermanent loss. But for me, I'm super bullish on the price of Luna, so I don't really want to deal with Luna USD for impermanent loss risk. I'm just going to be happy. The way I would be thinking about this is just imagine that you're going to stake Luna, right into this pool, right? Because it's no impermanent loss essentially, and then you're going to be able to receive Astro tokens, and maybe the APR is going to be super low, but I don't care, right? I'm just gonna like take my LP tokens or take my Luna, stick it in here, earn Astro. So that's gonna be phase 1. So phase 2 is a little more confusing, right? And I would suspect, or I guess there's like a video online. I'll link this in the description below. But in the DeFi podcast, we got Jose Maria Macedo, who's helped design this. Go over, I think this is Jan Lieberman. Jan Lieberman discuss why they designed it the way they did, and essentially the way why it's so complicated is to have anti-whale mechanisms. And you can check out the video if you're interested. But essentially, what you can do is you can either take your Astro tokens and stake it into this bootstrapping pool in phase 2, or take UST. So let's say hypothetically, like everyone provides UST, right? Then let's put it into here. You use a deposit 100 UST. The pool composition after deposit is 200 UST in 100 Astro, assuming that it started out with a 1-to-1 ratio. Well, in this case, the implied Astro price is 2 UST because there's more UST in the pool than Astro. So if a whale wanted to take like $100 million and dump it into here, then the implied Astro price is going to be like $10 million, right? And so any retail pleb like you and I can take our Astro tokens, dump it into here, and receive, I guess, more UST in return, right? Because if you deposit Astro when the implied Astro price is much higher, then you're going to receive more value, if that makes sense. So I wouldn't read too much into this. I would just wait until it actually comes out and then check like how the pricing is gonna how the pricing is going to be. But the way they designed it like this, so I guess the Astro can have more fair price discovery instead of just like relying on whales to like just nuke the price or just pump the price to some insane levels and whatnot. So I'll provide a link in the description for this video because they really thought hard and deep about this, right? I mean, it's their jobs, and I mean they're really good at what they do. So that being said, let's kind of move it over to the next topic, which is LUNAX by Stader Labs. So this is going to come out, I believe, pretty soon actually. But this is going to be a liquid staking derivative for Luna. So essentially, if you take your Luna, you stake it on Terra Station, you can't really do anything with that Luna, right? I mean, it's kind of locked in there. And if you want to take that Luna out, you have to wait 21 days to unbond, yada, yada, yada. But LUNAX with Stader Labs is going to introduce a liquid derivative for staking, which, is pretty interesting. So essentially what you can do is you can take your Luna, stake it through Stader Labs, and then you can use that LUNAX in Terra Finance, like DeFi protocols. So what you can do is you can mint LUNAX by staking with the liquidity pool, and then it's going to be like AUST, where LUNAX is going to appreciate in value against Luna, right? So when you do this, you're still eligible for airdrops, and you can use LUNAX to leverage LUNAX to borrow Luna several times, like leverage Luna. That's interesting. You can just leverage LUNAX, right, and borrow UST, right, while still receiving airdrops and like staking rewards and whatnot. You can probably like take LUNAX and bond it, or pair it with Luna, right? So LUNAX Luna, and do it, provide liquidity in a liquidity pool to earn fees and whatnot. So I'm pretty bullish, like liquid staking, right? There's Lido for Ethereum. There's Benki introducing liquid AVAX on the Avalanche ecosystem, and now Stader is introducing liquid, I guess, staked Luna on the Terra ecosystem. I'm bullish this simple aspect just because if you can use your staked assets as collateral or like provide liquidity with it, it's going to unlock a bunch of liquidity for the entire ecosystem, which is going to make the entire ecosystem more usable, I guess, and it's going to boost the TVL of that particular ecosystem. So, and in the future, you can integrate this with Anchor and whatnot, and this is it's going to be done by the audit is going to be done by the first week of December. So this week hopefully, and maybe it's going to launch like maybe later this month or like January or whatnot. But after the full audit, you can stake your Luna with them and then farm some Stader tokens. Maybe it's something you're interested in. Like me personally, I'm just like more focused on Astro because I'm actually bullish the price of Astro. If you look at like the price of all coins in the Terra ecosystem, they just go down, right? Because everyone wants to buy Luna, right? The Luna tokenomics are way too strong, so like people don't really like care to hold any other altcoin. I have some with my airdropped PSI tokens. I provided liquidity, and it's like down like 80% or something. So I'm down money there. But I mean, it was an airdrop, but it's still kind of sad. But it is what it is. And this entire narrative for Terra, I think will continue. I think December is gonna be like, oh my god, Astroport, and then January is gonna be like, oh my god, Mars. And though Luna has underperformed, I still think it's gonna go into some upward price discovery. I think $100 is reasonable, similar to how I thought $100 was reasonable for AVAX back in the day. So look out for Luna. Super bullish Terra. I'm biased, but it is what it is. Okay, now let's go over to Phantom ecosystem, because I think the next most logical rotation is FTM, right? And don't get me wrong, like I don't have some crazy magic, like crazy like what is this, like magic 8 ball telling me this, and the way I value these things, right? But the way I value these L1s is like based off of I guess comparing it to the valuation of other L1s. So the benchmark I often use is Tezos, right? Because I mean, I don't hate Tezos, right? I just like don't use Tezos. So like I'm like, why is this thing worth so much? But I have often mentioned that I believe that the floor, the support level of Phantom's valuation is that of Tezos. And I believe I think a week ago, this was at 5 billion, this was at 4.5 billion. So I was like, okay, the risk reward is way too good. So, I've been accumulating Phantom recently, and I still think it's going to do relatively well. In terms of catalysts coming up, they don't really have that many catalysts, just because, the Phantom Foundation doesn't really spend that much money marketing, right? Like Avalanche, they spend a lot of money marketing, so, it gets a lot of people's attention. But Phantom, even though it is a pretty good ecosystem, it doesn't really get the attention that they deserve. So let's kind of go over the DeFi Llama and look at, I guess, the TVL, right? So FTM, roughly $5.5 billion in market cap. Polygon at $5 billion, right? And Polygon is over 2x the valuation of FTM. And I'm not saying Phantom is going to flip Polygon, right? I think Polygon deserves a premium just because they're trying to do roll-ups for Ethereum layer 2. But, I'm just saying that, hey, like FTM, it's like, it's a pretty good ecosystem. It's a thriving ecosystem, and it's still like relatively cheap, right? And this is definitely bull market thinking, but it's worked before. And when it comes to like chasing trends or like riding trends, I feel like you should ride the trend until the trend proves you otherwise, right? Until the market tells you otherwise. Instead of trying to impose your will on the markets and be like, yeah, right now, Ethereum is gonna outperform. I'm gonna go all in Ethereum, right? Instead of saying that, like, why don't you just like listen, like look at the chart, listen to the markets, like, and like kind of evaluate what the market is telling you, and then evaluate that way. For me personally, I just kind of approach the markets from like a more of a conservative standpoint, and then be pleasantly surprised when the markets go up a lot. I think that kind of thinking is much better, especially at this stage of the cycle, because I don't think we're early in the cycle. I don't think we're super late into the cycle, but I think we're closer to the 6th inning than we are in the 3rd inning, right? And I've been saying that for a while now. So, Phantom, good ecosystem. I farm there like all the time, and the one catalyst that I want to go over is this announcement, right? And remember, this guy literally pumped the price of FTM, and like nothing really happened. But the thing is, like, I don't think this guy is lying, right? I'm sure. I mean, he has like 500, like 500,000 followers, right? So I'm sure he gets a bunch of inside information, and he calls himself Plan C. So like, I don't know if I should take him seriously, but I don't necessarily think this guy is lying. And it kind of makes logical sense for FTM to be listed on Coinbase, whether that's this month in December, January, February. It's still going to be a positive catalyst. And you might be wondering, like, isn't Coinbase listing a sell the news? Not really, right? I mean, of course, if the price is pumping into the Coinbase listing, it's going to be sell the news, right? AVAX was, in the short term, sell the news, right? It pumped into the Coinbase listing and then dumped, right? But eventually it went up, right? And then I'm sure it's going to go higher. So FTM, similarly, I think, when did this guy tweet? October 16th, right? This guy's like, he's like, all right, like October 16th, oh my God, Coinbase soon, bam. It didn't happen, bam. But I'm sure that, if it does happen, and when it does happen, and if Coinbase allows direct withdrawals from the centralized exchange onto the FTM mainnet, it's going to be it's a bullish catalyst, right? Because right now, to bridge the Phantom, you either have to go through like KuCoin, Binance, and if you're in the US, you can't really use Binance, I believe. So you have to go through Ethereum mainnet, you have to go through Avalanche. It's a pain, right? So if a centralized exchange like Coinbase can allow for direct withdrawals, I think it's going to be a bullish catalyst for the TVL of the ecosystem, right? Wait, this is strong, right? The TVL of the ecosystem. And, I'm not like buying FTM because Coinbase is listing soon, but it's one of the reasons why I think from a risk reward standpoint, given the valuation of Phantom is near that of Tezos, I think the risk reward is decent. And for me, I don't really care about catching the bottom, right? I'm just like positioning myself for a potential rotation. And when it comes to investing and trading and just farming in general, it's all about managing risk reward. And I think the risk reward for Phantom is pretty decent. So let's kind of go over some farms on Phantom. Let me connect to yeah, there you go. So obviously one is Geist. This is the premier money market, I guess, for Phantom. I'm sure AVA is coming soon, probably not anytime soon. But right now, in the meantime, Geist is the safest and it has the highest TVL. So you can take your Phantom, you can take Bitcoin, ETH, use it as collateral, borrow stablecoins against it, be paid to do so. Obviously, like these tokens are vested over 3 months, and if you want to claim your tokens, you have to slash 50% of it. But even if you slash your rewards immediately, you're still getting paid to borrow. So I still think it's a pretty interesting protocol, and that's good. I think Beethoven, right? This is app.beets.fi. This is a balancer fork. The balancer team publicly supported them, right, as an official balancer fork. So I consider them to be a safe protocol. And when it comes to auto compounders, being a liquidity provider, you can take FTM and DAI, right? Take a 50-50 ratio, provide liquidity, and earn 77%. Or if you don't want to deal with impermanent loss, you can go here, Phantom of the Opera, and be a liquidity provider, 70% with Phantom and 30% USDC. So you're going to be taking on less impermanent loss risk, and the APR is 38%. And if you want to auto compound this, right, you can go to reaper.farm and maybe go here, right? Reaper.farm, they were exploited once, right? And the UI is kind of janky. So it definitely approach this from a more conservative standpoint. However, I'm just bringing this up because Reaper, they're currently working on a token, whatever that means. Our audit is scheduled for the middle of December. So maybe they already took snapshots. I don't know. But if you want to speculate on a potential airdrop for current Reaper farm users, maybe it's worth it, right? But at the end of the day, if you look at the market cap of auto compounder tokens, they just don't do well, right? I feel like if you do, even if you do get this airdrop, it's not going to be worth that much. No offense to the Reaper team, but it's just what it is, right? I'm just calling a spade, but pretty decent. I think Beets is an interesting farm. I think it's underrated. The Beets token, it's a farm and dump token for now, but interesting place to farm for sure. And lastly, I feel like I always have to talk about DeFi kingdoms, so I'm sorry for anyone that's tired of me talking about DeFi kingdoms. However, I still think DeFi kingdoms, I don't know why it's not working. Can I switch to Harmony? Let me refresh here. I think people underestimate the Jewel farm, heavily. Let me turn off the volume. It's pretty loud. Okay, there you go. So what you can do in the Jewel farm, right? DeFi kingdoms, obviously, is that you can provide liquidity for Jewel and other L1 tokens such as AVAX, 850%, Matic, 840%, One, 840%, Luna, 800%, FTM, roughly 800%. And I feel like people are underestimating these farms, right? And sure, most of these tokens are locked. However, I'm very, very bullish this token. And if you want more passive exposure to, or I guess less, not passive, but if you want, a risk managed position as a farmer, I feel like, taking Jewel, FTM, pairing it, being a liquidity provider, accumulate Jewel, can't be a bad strategy, right? I'm a fan of it, right? I'm not doing this, right, because I just own a bunch of Luna. I'm not gonna bridge it over here. I'm not gonna deal with it, and I'm gonna use most of my Luna for the Astroport Airdrop, and FTM. I'm in some farms, so I don't want to move it here. But just bringing it as a potential way to gain exposure on these L1 tokens and still farm with them, right? I think Matic is underrated as well. So that being said, in conclusion, Luna, FTM, I think it looks strong, right? I like Avalanche, but I think they need some time for consolidation. I'd be happily, I'm happy to be wrong, but the chart looks parabolic. And the ETH BTC narrative, right? Remember the BTC narrative, right? Of BTC is about to take over the markets. And don't get me wrong, I also said that, right? And I'm coping as a result because BTC hasn't really done anything. Luckily, I can use BTC as collateral on Aave and borrow against it and farm. But being a BTC maxi has not paid anyone, right? So I think ETH can do well, right? The ETH BTC chart looks very, very strong. However, I wouldn't get too caught up in the narrative of ETH is about to take over the markets, all in ETH. And yeah, there you go. Bitcoin is my number one position in my portfolio. ETH is my number two position in the portfolio. So I'd be I'll be happy if I'm proven wrong, but I wouldn't sleep on the L1 narratives. For this bull market, I think the L1 narrative is super strong. I think it's gonna keep continuing. At some point, it's not gonna make sense, right? You can't just keep pumping these L1s and do these rotations. But I still think there is more room to go. So thank you guys for watching and have fun farming out there.